Hi, I'm Tyler Ballhorn. Welcome to this week's Stock Scores Market Minutes. Pay attention to what doesn't make sense, plus the trade of the week on ZIOP. Let's get right into it. Often the best opportunities are the ones that don't make sense. I love it when a stock or a sector shows strength and nobody knows why, because there's a good chance that there are people trading on information that is not yet widely known. And as that information spreads, that stock or sector will continue to go higher. If you wait to find out the why, sometimes it's just too late. The market is moving on expectations for the future, not the past. So pay attention to those stocks and sectors that are showing strength for no apparent reason, especially after a lengthy period of underperformance. Let's get into this week's analysis. S&P 500, big rally on the Trump win. This is the 30-day, 120-minute chart, and you can see the rally we've had here. Now, we've come into resistance at the highs and basically stalled there. When you've got that kind of a jump, you're going to get profit takers, people that were ballsy enough to be accumulating the market down here. They're up here and they're saying, hey, I'm going to take some profits. So don't be surprised if you see the market at least go sideways. However, the longer term chart shows a flag break. Now this, a few weeks ago, we had a break of the upward trend line right in there. At that time, it was from a new high, not from a falling top. So now we've got a break of a flag that's going to do one of two things. We're either going to break through to new highs in the weeks ahead, or we're going to roll over and make a falling top. If that happens, if we roll over, make a falling top, and then move down through that level, I want you to be very, very defensive. If, however, the market can rally and hit the old highs or break through them, then the bull market remains in effect. On the Russell 2000, look at that big rally this week for the Russell. This is the weekly chart, and you can see again a flag break. It's coming into resistance at the all-time highs, so again, a lot of reason for the market to see profit taking in the small caps. I expect that we will see the market stall next week. Now on the Canadian side, we had a little bit of weakness at the end of the week here as oil fell lower and broke through some support levels. We'll talk about that in a moment. So I think you got to be a little bit cautious until oil can stabilize. You can see we're stuck in a range here, basically sideways trading with quite a lot of volatility. That volatility implies that investors are uncertain, and so be cautious until we can see that start to consolidate and build into some kind of a pattern. Right now it's a little bit unpredictable. On the longer term chart, we are still in that upward trend, but notice that the pace of the trend is slowing. That shows that the buyers are getting tired. Now, we don't really have resistance until up here, so I haven't lost hope for the market yet, but I do want you to be careful. If we see this support zone broken and this one's broken, again, this is a weekly chart, then you want to be cautious. For now, it's a bull trend, but one that is losing momentum. Speaking of momentum, here's the small cap market, which is picking up momentum to the downside, largely because gold has been weak and also oil, and those have a heavy weighting in the TSX Venture. So I've been cautious about this market for a while because the upward trend was broken. And look what we have, falling top, falling top, falling top, just consistent falling tops, burning through support. Next level of support is here, but I do think that this is a market to be very careful with. On the bond market, big drop to the downside, which means interest rates took a spike higher. Again, market pricing in inflation because Trump is supposed to spend a bunch of money doing infrastructure. And also don't forget that we do expect a rate raise by the Fed later in December. That, of course, helps the bond market go higher. Now, bond market a little oversold here. How do you know that? Well, draw your trend line. And look how far below the trend line we are. We're way down here. That's a big distance from the trend line. So that means we're probably due for a little bit of a pull up. Support not until here. So we could see a little bit of weakness first, but this market is oversold and due for a bounce. On the US dollar side, we're trying to break this downward trend line, just tickling through it from rising bottoms. So that's bullish for the US dollar. It's not a decisive break yet, but it does look like the US dollar wants to go higher than lower. And so think about that and how it might affect your portfolio. On the gold side, of course, strong US dollar, hard on gold, rising interest rates, hard on gold, the Fed raising interest rates, hard on gold. We've talked about this for a while. There was the breakdown that I talked about a little over a month ago Then we had the comeback rally. I call that the sucker rally because all it did was take the market back to the downward trend line. Didn't even quite get to it. And then we rolled over. We are at support, pretty good support right here. So I do think that oversold gold will bounce. Traders can take advantage of that. There will be a bounce in the gold stocks. I would look at trading things like the Nugget, NUGT, which is an ETF that goes up when gold goes up, and also T.HGD, another ETF that benefits with gold rising. But only do that if you are a nimble, savvy short-term trader, because it is a short-term trade, not one where you're betting on a long-term upward trend in gold like we had back then. On the oil side, there's that breakthrough support I talked about. We've had pretty good support there. We broke through that. That implies we're going to retest the lows from August, and pretty oversold here. We've been in a fairly steep downward trend for the last few weeks, but it does look like oil wants to go lower, and that's going to hurt the Canadian market, especially because there's such a heavy weighting of oil stocks in that market. The fear market, the fear chart, I got the wrong chart here, but basically fear is not a factor. We've gone back into the trading range and got stuck there. So US stocks, neutral on both time frames. That's an improvement from last week. The comeback that we had this week put the market in a better state, but they still are dealing with that long-term resistance. Canadian stocks, bullish long-term, we're in that upward trend, but it's losing momentum. Neutral short-term, we've had a little bit of weakness in the last day or so with that weakness in oil, so we're stuck in that sideways range. Bearish on both time frames for gold. I want you to be cautious with gold. Again, if you're a savvy trader, you can maybe trade a bounce, but there's no sign of the bounce yet, so wait for the sign. On oil, neutral and bearish short-term. Uncertainty removed and up stocks go. Gains have been considerable, so expect some short-term profit taking. Weak oil and gold weighing on the Canadian market, but these are oversold in the short term and due for a bounce. Remain cautious with gold and oil. Only short-term traders should try to play that bounce. All right, let's get into the trade of the week. This is ZIOP. Picked it up right here when it was behaving abnormally. Gave an entry signal using one of my strategies and actually sold it right up somewhere around there on the pullback. And then someone in my live trading webinar sort of down around here says, well, what point should we buy ZIOP back? And I hadn't really thought about it. And then I said, well, look, we've got a nice upward trend line here. Look for it to bounce off of that trend line between 620 and 630. Look what it did. It pulled back, I think, to 624, bounced, and gave a nice trade again. So one of the things you can do when markets run away from their trend line like they did up here is take your profits, but then look to buy them back when they come back to that upward trend line. This is an example of a short-term trade. That's a 5-day, 5-minute chart, but you can use that same concept on a daily chart or even a weekly chart. Stocks that run away from their trend lines usually come back to the trend line. Try buying them at their trend line for the bounce off of it. Well, that has been the Stock Scores Market Minutes for November 14th, 2016. Have a great week in the market and trade well.